Hello guys, good morning. Today we're gonna do a little bit of a resume on previous week's price action, and we're gonna go over each and every single day. Gonna try and explain what price did, why it did it, and how we could have taken advantage of it. And in the meantime, explain a couple of concepts that showed up, and again, how we could have actually applied them through the week. So before starting the video, I made a couple of notes on each day, so we can have something already. And we're going to be doing a Monday where we had a bearish day, quite clearly. And okay. Oh, the indicator doesn't matter. So Monday, keep in mind that every single day what I do is I get into the charts around 8:20, 8:15 New York time, so 10 minutes before the open. And what I try to do is analyze what happened through the night, right? And try to determine how whatever happened tells us, well, price can go lower, price can go higher, price did this, so I believe this could happen next, etc. Right? That's what I basically do as soon as I get onto the charts. So for me, Monday, this is when I start analyzing to the left what happened. And if we go to the left, we see that before even midnight began, before even the day started at New York time, we had price going aggressively higher, taking buy-side liquidity, and we see price immediately breaking, well, not breaking a low, but causing a market shift on the 5-minute, creating a fair value gap that is respected. We also have liquidity in the lower time frames in this couple of highs, which basically is just a little bit of an extra confluence in this case. But as you can see, this liquidity is well, this is basically taken as liquidity. And then what is it that we have? The exact same thing, displacement on the 5-minute after running on buy side liquidity, which generate liquidity. Sorry, not the generate liquidity, generate a fair value gap, and that is mitigated, respected, another fair value gap, respected, another, respected, another. This one is not respected because it ends up acting as liquidity for this to work out, and then there's another fair value gap here, and I think that there's even this one here. Yeah, that one here is mitigated as well. So lovely, right? So what is it that I can realize from this little bit of an analysis? First of all, my week forecast was that price was going to be bearish, which ended up not being entirely true. It does end up being lower than where the week started, but not the way that I would have expected it to, right? So I was expecting a bearish week, so seeing this happening, how price just respected that change in the trend after the round of buy side liquidity, for me it tells me that the direction has changed, is going lower as I would have expected, and basically price just respecting fair value gaps and just going lower, basically, right? At the ending of London and through pre-New York, we have somewhat of a range. Liquidity is created on both sides. I wanted to see these equal highs taken before actually looking for sells, but that never really happened. We then got phase 1 from 7 to 830, goes lower, ranges, creates buy-side liquidity, which is taken. Displacement lower with not much aggression, but at the end of the day, we do get that fair value gap there that we could have taken advantage of. And the open, let me actually point out the open is this candle, and as you can see, the open goes lower, right? Doesn't break structure, there's no market shift. There is a run of buy side liquidity, but this does not cause a market shift. It doesn't cause a break on structure, so for me that's not good enough, right? So what is it that I look? I'm gonna repeat this over and over, but just really I recorded a video which I didn't post because it turned out to be pretty boring, and I was just not in the mood to produce a video, to be fully honest. And the first thing that I look for is liquidity. So I run on buy side liquidity, run on stops basically. After that, I want to see price aggressively going lower or higher, right? So displacement lower or higher. What is a displacement rate? So the displacement has to create fair value gap and cause market shift, right? I should have done it with the other tool. Okay. And 30 will be inside of this fair value gap, look for lower time frame entries. what is it that we look for lower time frame entries? To do pretty much the same, if I can be honest. So in the lower time frame entry, let's suppose we have price, this is a 5-minute fair value gap, price trace into it. In the 1 minute, what is that we have here? Liquidity. We will look for price to create a low or to just break this low, right? So cause a market shift. We have the displacement, we have the market shift, potential entry, stop loss up here, looking for, well, whatever sell side liquidity is pending below, right? But of course, after the 3 steps that I just mentioned. So session opens. Oh, and I look for that after 8:30. Session opens, goes lower. Do keep in mind that what session did here is that it began after a run on buy side liquidity, and it basically began inside of a 5-minute fair value gap. Now, this 5-minute fair value gap does come from taking a high of liquidity, a couple of highs that we have here. Not very strong liquidity, in my opinion, if we compare it to, as an example, what we had up here, which is pretty clear equal highs. But it does take liquidity, causes a market shift, creates a fair value gap, price trace into that, takes buy side liquidity, and takes buy side liquidity, starts going lower, but there's no market shift. So for me, there's nothing that I can do about that, right? What does price do later? Goes higher, and what is that we have here? We have sell side taken by this. Price goes, actually do it with the other one. It just works much better. Goes higher after, again, taking a little bit of liquidity, right? We're talking about like this tiny bit of a high that was barely swept by a tick or two, right? Counts back down, respects that, aggression, market shift, still basically, well, not a market shift actually, this is still bullish, and creation of fair value gaps. Could have we looked for buys here? Yes, I do think I took a buy here on paper trading, don't remember entirely. So here's the thing, we never really had a clear opportunity to buy, right? Because in my opinion, again, this is very little to confirm a buy or a run on buys on sell side liquidity, and at the same time we have everything against us. Right, we have everything against us because price, the week's forecast is telling us that it's very likely going to be bearish. We have London pre-midnight and pre-New York just being bearish, right? We've just taken buy side. Here we've taken buy side as well. It doesn't make that much sense, and some buy side here as well. Again, after a run on buy side or sell side liquidity, what is it that I look for? I wait for the displacement to occur, which it doesn't happen here. And I wait for it to happen on either the 5 or the 15. So if the 5 or the 15 don't show me that, then I just don't trade. I was asked to talk about patience when waiting for the right trades or something like that. And I'm going to talk about it probably in a video that I'll make for tomorrow. But the thing is that I can't really say much more than if you backtest or if you have studied a pattern or something that you know that repeats itself, such as my, I don't want to call it my 3 steps because it sounds like my previous strategy, but basically first the run and stops basically, 2 the displacement, and 3 fair value gap, market shift, and 4 we can call the lower time frame entry. As an example, I wait for this because I've back tested and realized that this works out very often, and it's very precise as well when all of this happens together, right? And of course, this has to be 5-minute, 15, whatever it is, doesn't really matter. The thing is that it has to be one of those 2. So when you're looking for a setup, if you don't have this, as an example, this is what we could call the trading plan. This is exactly what I wait for. So if I don't really have that, then I can't trade. That's why, as an example, when this buy side liquidity is run above, I'm not looking at the 1 minute, the 2, the 3, or the 4 here. I'm waiting for the 5 and the 5 or the 15 to create a fair value gap and a market shift, and then look for the lower time frame entry. Which, as you'll see, we do have an entry here in the lower time frame. If I remember correctly, after taking all of this buy side, right? But we'll discuss about that in a second. So the thing is that honestly, there's nothing that I can say for you to in a moment say, okay, so this is exactly what I have to do. The exact thing that you have to do is be clear and understand what is it exactly that you're looking for. And when you know what you're looking for, you just wait for that to happen. And if it doesn't happen, then you just don't trade. Because something that you might do is say, okay, so I don't have what I want to trade, but this does look good. And then you go ahead, take that trade, and take a loss. What will happen when you do the daily resume or the week resume, or to just go back and see why you took that loss? you realize, so I took this loss. Why did I take this loss? First of all, I was not waiting for, well, first of all, actually, the only reason in this case is you didn't wait for what you usually wait for. If you have a plan or steps that you follow or things that you wait for price to do before taking a trade, and you take a trade where that didn't happen, then the only mistake you did there was just not waiting for your steps, not waiting for the things that you wait for to happen before actually taking an opportunity, right? So I don't know if it's patience. I mean, yeah, it's probably patience. But for me, it's more about like understanding that if you don't wait for this and you just take whatever seems good in the moment, you're more likely to take multiple losses. And whenever the right pattern shows up, you're either too burnt out to realize that you have a pretty good trade here, or when you take that trade, you will barely cut your losses, right? So you took 3-4 losses, and with the win you just cover those losses, which is exactly the opposite is what you should be doing. With a win you should cover 3 or 4 losses. You shouldn't be covering, well, it's actually the exact same thing. But what I'm trying to say here is that you have to look for good trades that allow you to have a good risk to reward ratio, first of all, and second of all, that will give you a trade. Not that will give you a trade. Hold on, because I'm getting mixed up here. You want to have a setup that you know works based on your strategy, based on your steps, based on the concepts that you know, that based on the back testing and everything, you know it works out very frequently, and that you're going to take losses, of course, because you either make a mistake, you misunderstand something, or you just don't realize that round of stops has happened and you're looking at the exact opposite direction. Multiple things could happen that make you take a loss, but the thing is that you have to take a good amount of wins in a few losses, right? It's not about taking 10 losses and 4 wins to be just 2 or 3 hours up. You don't want to be that. You don't want to be just a couple of hours up. I mean, it's profitable at the end of the day if you can do that consistently, but it's just not worth it. Because in this time, maybe it's 2 to 3 weeks, and 2 or 3 hours in profits is really not that much. It's a good start, clearly, don't get me wrong. It's a good start because it's something that not many can do. But you want to be, maybe after 20 trades, you maybe want to be 10, 15, 20 hours up, right? Because you have a 1-to-5 risk reward ratio usually, or you have you just have a pretty good win to reward ratio, not win to reward ratio, a pretty good win ratio. There are multiple things that are all about risk management, right? This is, of course, very important in trading because that's literally what keeps us alive on a market like this, where we are always going to be taking losses, right? Thing is about not having many losses, waiting exactly for what you know works. And if it doesn't happen, then you just don't trade. As an example, in this day, we didn't have that. Reason why I took the buy just on paper trading is because on paper trading, I tend to take everything that I see, right? And as an example, paper trading, actually right now, I do believe it's in profits. 23,000, but you're gonna see that it's really not that good, right? First a win, multiple losses, pretty good win there, multiple losses as well, right? It's not about taking everything that you see, right? As you can see, the paper trading shows that it's not about taking everything that you see. It's about taking what makes sense based on what you know, and after that, then if that's not there, then just don't take it. Simple as that. Okay, so after that little bit of a ramble, let's just continue with this. I don't know where I was, but the thing is that if I wait for a run and buy stops, buy side liquidity in this case, and then a displacement lower, and I don't get the displacement, there's nothing that I can do. So what do we have here on Monday? It does create a market shift. This is the market shift. I'm not going to be able to write that. And it does create the fair value gap. Price trades into that? No, it doesn't. The lower time frames don't get to create an entry here. So for me, that's not a trade. And for me, I was not able to do anything on this price action, sadly. And what I meant is, yeah, would have not been a nice entry either. So as you can see, price, so random buy side liquidity, and then this could have been a fair value gap they could have traded. Then as you can see, we even have a lot of liquidity here the price could have taken, and we could have said, or not taken per se, but we could have said, so we have the fair value gap, and look at how all of the liquidity is being built up right above it. this is not something that I would consider, right? It's not that I wait for liquidity to be built up before taking a market a fair value gap. For me to take a fair value gap, the liquidity should have been before, not after, right? So this is just an extra confluence that you find later, but supposedly you should have been into this entry already. Again, I didn't take this because it's just based on the 1 minute. We have a 1 minute market shift, which is this one in my opinion, or we could say it's this one because there's a tiny bit of a retracement there. I don't really like that. But it's just all based on the 1 minute, right? What is that I wait for? Run and stops, displacement, fair value gap and market shift in 5 or 15 minute. And after that, the lower time frame entry. So displacement also should be 5 minute. 15 minute, right? Because otherwise it just doesn't make sense. Okay, let's just so the entry that I was mentioning, we have the run on buy side. We finally get the 5 minute market shift. If after a 5 minute market shift we want to be looking for entries, this would have been the first. And honestly, this is the only other fair value gap that we can find inside of this move. So overall, this would have been the only entry that we could have taken, but stop loss should have been all the way up here, which is not ideal, but it's not the worst stop loss that we could have gotten in this scenario, right? So again, this Monday specifically, I do believe we had some really good price action that we could have used, right? As an example, London midnight, everything was actually pretty clear, right? Overall was pretty clear, the direction was pretty clear, and ended up being that direction, right? But as I mentioned here through New York kills him, it turns out that to be a bit more complicated. Price creates liquidity without taking it, and after taking it, there's no clear area to sell from or area to look for lower time frame opportunities. So what I mean with that is that after we finally do have a clear run on buy side liquidity, there's no displacement with a market shift that we can actually take advantage of. And when it does happen, we just don't get price trading into that to then continue lower. All right, so for me, a day that just didn't have opportunities, and it's really all that I can say about this day. Concept wise, we could have been able to determine the bias due to this run on buy side liquidity, and as you can see, price immediately starts creating fair value gaps on the downside, creating opportunities to go lower. There's very likely opportunities in the 1 minute. You can go and look at yourself if what is it exactly that we're looking for. Just go to lower time frames. You have the 5 minute fair value gap or 15. Price tracing to that. There's a market shift. There's displacement with fair value gap in the 1 minute. That's our entry, right? Simple as that. So if you want to check if there are entries on that. That's pretty much it for Monday. Let's jump on to Tuesday. Let's put this in the 1 hour. So you can go straight off the next day. 5 minute. Okay, let's do this quick because I gotta go. Complicated price action. Explains why. Okay, yeah. So when do I begin analyzing? Let's suppose today I began at 7 or I began around 8, 8:15, 8:20 as I mentioned. What is that we have to the left? Midnight begins going aggressively lower. What does it do when it goes aggressively lower? In this case, we have a lot of sell side liquidity, right? Because here, as you can see, price did range, it ranged, and look at how it created sell side and created buy side at the same time. What is it that we have? Midnight goes aggressively lower. London even continues aggressively lower. We have even tiny bit of sell side in the 5 minute that we can see in the 5 minute. And then we see huge aggression higher, which sure, we do have a run on buy side liquidity. But looking at the big picture, what just happened? This is something that I already explained if I remember correctly. But look at how the level is just absurdly or stupidly respected. Like how the levels just continue to be respected. That for me, when stuff like this happens, it's just not a coincidence, right? It's not that this just happens because price out of nowhere say, oh, okay, let's just turn back from here. This is because the way that the market works and the way the price is delivered, it works like this. It knows that if it stops there and starts going lower, people are going to start selling like crazy. People are going to start putting their stop losses right above, which is why we could have expected a bullish day, which is why I managed to take a buy on this, which was closed pretty early, not gonna lie, closed around here, if I remember correctly. But for me, that was a pretty nice and comfortable target, right? So here's the thing. How did we even realize that this was enough for price to cause that? We don't. Honestly, we just don't. At least me personally, based on what I know and the time that I've spent onto the charts, I can't really say for sure if I would have known because I didn't know till this happens that the day was going to be bullish, right? So even if we don't really know the bias, how can we determine what the bias is going to be, or how can we take advantage of opportunities through the market without, again, knowing what the bias can be? Okay, so I had to make a little bit of a pause to have lunch. Now I'm back, and we left off at the how do we know what to take advantage of when we don't know the bias, or how can we determine the bias as we go? So these are questions that I kind of have the answers to. There are questions that I don't have the answers to. I can't say every day what the bias is likely to be. I can, though, understand what price is showing me, and basing myself on that, I'm gonna do my best to use what I understand and what price is giving me to try and take advantage of what we've got and simply try and profit from it, right? Which is what we all are trying to do. So if we don't have a clear bias, which in my opinion today we didn't, as an example, actually, I was looking for a bearish continuation. I was looking for price to basically just go lower, right? So as an example, when I saw this run on buy side, I said, okay, now we need the impulse lower that creates those fair value gaps for us to basically just take advantage of the sells that we were expecting from the beginning. But what happens with the sells? There are two things that happen with the sells today. Do we have the run on buy side liquidity in this case? So which is the step number one for me? We do, because price goes aggressively above the highs, starts going lower. We don't see displacement at first, but then retraces and goes aggressively lower, creating small but definitely displacement overall and fair value gap. Market shift happens on the break of that low, and then price retraces into it. So what do we do now? We wait for price in the lower time frames to give us what we're looking for. Do we at any point, after mitigating this fair value gap here, do we at any point have a 1 minute market shift and fair value gap being created? We have the market shift here, but there's no fair value gap. Another market shift, no fair value gap to sell, fair value gap to even buy, goes higher. What happens here? Do we have a fair value gap here after taking this liquidity? Yeah, but what happens here? We have the 5 minute market shift to go bullish. So at this point, I'm looking for sells. But the 5 minute structure where I was looking for sells completely fails. There's nothing that I can do, or at least I can't continue looking for sells if the structure where I was looking for sells has failed. So at that point, price has taken the high. And what is it that I'm doing? Keep in mind that at this point, what is it that I have? I have my 50-minute time frame here. I have my 5-minute time frame on this, and my 1 minute time frame on this. So I'm seeing that the 1 minute is not giving me any kind of opportunities on this side. I'm seeing that the 5 minute has actually broken structure. The 50-minute was a mess on this day. Let me actually show you. This is the 50-minute in this price action. You can see how the 50-minute had nothing for us. It had literally nothing. So if we don't have anything on the 15, I mean, there's nothing we can do about it. But of course, that's why, as an example, I use 5 and 15 minute. I don't only use the 5 or the 15. I use them both. So I was looking and seeing, okay, so this market shift happened. This move caused a market shift. If we look lower, we have a fair value gap. So that's a market shift with a fair value gap. And if we look to the left, we have a run on sell side. And also, we are mitigating this fair value gap here. And why is that fair value gap important? Because it took liquidity. If this fair value gap was just created, but it didn't take any kind of liquidity for me, it's not really useful. But this fair value gap was not mitigated until here. It had a ton of liquidity pending, right? So this is why it's important to not really be biased. What I mean with that is that we could expect the week to be bearish, we could expect the day to be bearish, but we just have to use what price gives us in the moment, right? So based on ourselves on midnight, what did midnight do? Have a little bit of a range, goes aggressively lower, and we have sell side liquidity being taken aggressively, displacement higher, buy side liquidity? Do we have the exact amount of displacement when reacting lower after taking that buy side, comparing ourselves to the reaction that we had here after taking all of this sell side? I don't think we have, because we have a huge aggression, and then price does show some aggression, but doesn't create, as an example, on the 50-minute list, doesn't create fair value gaps. Then it does create fair value gaps, reason why I was still somewhat convinced on the sells, continues to respect them, then run on buy side liquidity. So it's looking for sells. What happens? The sells do give me compliances here, because we have the 5-minute run on buy side liquidity, the 5-minute displacement with a market shift and fair value gaps, right? Not the greatest one, because of course the best kind of displacement that we can see is if price in this case would have gone above this high, and immediately do the displacement, create the displacement with the market shift, right? And that's where we look for lower time from entry. In this case, what is that we had? We had the run on buy side liquidity. There's no fair value gap in here, then the aggression, and that's the fair value gap. And the market shift happens here. So it was already inconvenient the way that the buy side, or the sell side, sorry, was occurring. And at the end of the day, it fails without giving us an entry on the lower time frames. And that's when this happens. That's when you have to realize that the sell side has just failed. And on the other side, the buy side is working out, because it just caused a market shift, created a fair value gap, comes from taking multiple sell side liquidity. Maybe here as an example, because my mistake on this day was that I didn't really realize what had happened entirely, or wasn't making the analysis well. And we have 1, 2, 3 reactions to this level, not just levels that are being respected, creating lots and lots of buy side liquidity. And then we have this little bit of a range that definitely created liquidity, and look at the aggression taking that liquidity, and look at the aggression creating the fair value gaps. Price here was just ranging to continue higher. Simply all that happened. So basing ourselves just on this run on buy side, on sell side, sorry, we already want to be looking for buy side, for sell side liquidity being taken, that then generates fair value gaps for us to trade from. Simple as that, right? Simple as that. Because price is just creating multiple sell side liquidity, buy side liquidity, but still respecting the buy side. It's respecting the buy side while it's taking the sell side here, all of these areas, fair value gap, market shift, fair value gap, so on and so forth. All right, so did we have a clear bias for this day? In my opinion, we did. But what I'm trying to show here is that, as an example, I personally thought that the day was going to be bearish. So up until this point, when the market shift happens, that's when I realized that the bearish side, in this case specifically, fails completely. But on the other side, market shift on the 5-minute, fair value gap, we look to the left, run on sell side, here, fair value gap, another run on sell side, comes from mitigating fair value gap here in the 5. This comes from mitigating that sell side, and of course we have all of this huge range. If we look higher, we realize that there's just a lot of buy side liquidity pending above this high. It's the reason why it took the liquidity the way that it did, right? So for me, looking at it now and looking at it after the day had finished, I realized that the day was somewhat very clear. The direction was somewhat very clear, but in the moment, I didn't really realize what is it that we had. But still, I was able to take advantage of this, as I was able to show with the video that I posted the same day, where I took this trade. And of course, the rewards on this trade could have been much larger than what I was comfortable with, which I was comfortable with at around 5R, a little bit higher than that. But as you can see, if we would have allowed price to run, of course, depending where we would have gone for, peaks at 27R, but could have gone for this buy side liquidity, and that 7.62R made in what? Approximately 30 minutes. That 7%, 7% could be $1,400, could be $7,000, could be $70,000, depending, of course, on a lot of factors. But thing is that today, everything that we look for happened, right? We had number 1, run and sell side. We had number 2, which is displacement and fair value gaps in the 5, displacement and market shift, right, in the 5-minute. And then mitigation of 5-minute fair value gap, price trace into that, creates a fair value gap, that's our entry. Simple as that. As an example, there are days where I realize, not that I realize, but as an example, there from time to time, there are maybe 3, 4, or maybe an entire week, or maybe 2 weeks, or a week and a couple of days, where I'm trading or I'm analyzing price and I realize that there's nothing happening, or I just can't find opportunities, and I realize, as an example, on this price action something actually happened. Basically, I feel like I'm not trading the best way that I could, right? And what those days or weeks tend to cost me personally, it shows me like a little bit of I get a little bit of a feeling like I'm not doing stuff right. Right? I feel like I'm not trading as best as I could, which leads me to miss out on pretty clean opportunities, and I don't know what to do about it. And days like the one that we just saw, where everything happened exactly as we wanted to happen, are very helpful to have pretty close to us. What I mean with pretty close to us, as an example, you could have in your Notion, in a Word, or a Google Doc, whatever you wanted. You could have a tiny bit of a document or section where you have the ideal scenarios, right? Where you have just a couple of screenshots with explanations on the charts, with explanations below the image, where you say, so our strategy is based on this, this, and this happening. And that's when we look for the lower time frame entries for us to be able to do this, this, and this, and take the opportunity. On this example, exactly that happens. And you can see it here. And you show the picture, and in that picture happens the three first things, then the other 3 things, and things just work out the way that you were expecting. Not that you were expecting, but basically the way that we look for the opportunities to show up. Right, so days like the one that we just saw are days that are worth having around, because when we're having a rough time, taking a couple losses, price just doesn't give us opportunity, we need those close, because that's when we need reassurance that the strategy and the way that we want to trade, or the price action that we wait for to show up for us to be able to take opportunities in the market, do happen the way that we expect it to happen, the way that we want it to happen. The thing is that we are never going to have it's not that every single day exactly that will happen, right? We've gone through Monday and Tuesday so far. Tuesday was really clear on everything, right? I personally didn't realize in the moment. Looking at it back now, I realized that it was a very perfect price action that was pretty clear to take advantage of. I would have not taken advantage of this entire move, that I can assure you, but definitely could have taken that entry, which I did, and should have been much more sure when analyzing this, right? Because we had so many confluences on this price action that really should have been a really clear day. Since the beginning of the day, I should have realized we've had a pretty nice run on sell side, a pretty clear resistance level working out, just creating more and more buys out liquidity, which is here, the highs that we mentioned. And we haven't taken those, and we have taken the sell side, and this fair value gap has been created in the 15, fair value gaps in the 5, and then this is happening. It was a very clear scenario, right? So what I'm trying to say here is that having those days where price action just did everything that we look for are really worth having around, because when we have days where price action either doesn't do much or doesn't give us what we're looking for, they tend to be difficult to swallow, per se, right? We can be a couple of days where the market just doesn't give us what we're looking for, and we just can't trade. Or as an example, we're not sure if that's what we're looking for, and we could use those examples, those, between quotes, perfect examples, to say, yeah, this is pretty much what we're looking for, so let's just take advantage of it, right? Just a little bit of a note. This is actually something that I don't have specifically, but I do remember, and I do have like reading a couple of days that worked out perfectly, so I can go back and look at them. But honestly, it's like it's something really, really cool to have, right? Because it really does help you. And just looking at the trades from time to time, that's definitely allow you to understand those patterns, those setups much better, right? Just by looking at them again. Okay, Now we're gonna do Wednesday, which had an interesting day because, as you can see, keep in mind that my kill zone, I add like that extra hour, which I don't tend to trade that much unless there's something like really clear. At around 10, if nothing has happened, as an example, this day specifically, I did manage to catch a sell in the paper trading, which was a pretty awful sell, but definitely worked out overall. Thing is that I just added that extra hour, right? But thing is that, as an example today, price action was somewhat really good, but complicated in many ways, right? Complicated in many ways. So let's just go straight to the point. Let me actually show you what we have to the left, which is the lows that we just basically were talking about. And look at what's happening here. When price starts ranging, it tends to be because of something, right? First of all. And if we look to the left, maybe we're gonna be lucky enough to find something like this, where we have a couple of equal lows basically around the same levels, and price is basically reacting around those same levels. So price is just basically manipulating liquidity into the market. When things like this happen, in my opinion, they're pretty clear what they are there for. Right? And then, well, you see these things happening, which is, well, just telling you, yeah, you were right? Just telling you, yeah, of course, we were basically creating liquidity, manipulating tons of people into creating sell-side liquidity here, or putting their stop losses below these lows, for us to just use it as basically fuel to go higher, right? So this range, I realized about it a little bit late. But when I realized what was going on, I wanted to see price taking that, changing the market shift, and then looking for a fair value gap to trade from, right? That was my ideal scenario for this day, which kind of happens, but we'll see. We'll see how things show up. Okay, so let's analyze. I get into the charts around this time, let's call it. And let's put it with this. Okay, so we look back. What happened through midnight from 0 to 2? Price goes higher, takes buy side, starts going somewhat aggressively lower, takes sell side, retraces, mitigates something here, probably the 15, something like that. Tiny high, taken as liquidity, starts going lower, more liquidity, takes that liquidity, aggression lower, market shift, fair value gap, entry continues lower, quite aggressively. Pre-New York basically had the move of, well, not the move of the day, but basically the move through everything before New York. Phase 1 has a little bit of a retracement, equal highs, goes above the highs. Are we expecting a sell day? In my opinion, we are, right? Did we have a sell day overall? I do believe we had, but of course then this is a little bit confusing. But in the moment, we are definitely expecting a bearish day. Why is that? So I was also asked to talk about bias, and bias is difficult because we're never going to have it 100% right? Because I can tell you, for you to wait, for you to be patient to wait for a trade to show up, you literally just have to wait for it. You have a plan that tells you, I've already talked about this, I know, I'm not gonna repeat it, but basically, you have a plan that tells you, based on what you've studied and what you've been taught, this exact thing repeats itself over and over in the market. So you just gotta wait for that to happen, and that's when you trade. If that doesn't happen, then you just don't trade. So that's my clear, quick and easy answer to that question, which is a complicated question overall, but overall again has a simple answer. Now, when we're talking about bias is complicated because we're never going to have it right. And whatever amount of confluences we have in our favor, we're never going to have it right. Now, we're never going to have it right. We're never going to have it 100% right. So, was I expecting a bearish day today? Definitely. Why was I expecting a bearish day? If I remember correctly, we had previous day mitigating to like the 50% of the entire daily previous move, something like that, mitigating potentially a daily fair value gap. But mostly, if we just look at what we have currently, we have midnight taking buy-side liquidity, dropping. London taking buy-side liquidity, dropping a bit, creating liquidity. Pre-New York strips buy-side liquidity, dropping. So if everything has happened exactly like that, where there's just buy-side being taken and price just dropping, I'm gonna expect New York to do the exact same thing. I'm just gonna wait for that to occur. What extra do we have on this? We have the fact that we are expecting a bearish week based on the week's forecast, because we've just mitigated, we've just taken a lot of buy side liquidity in the daily, and then the market shifted. We have a lot of confluences. I've already talked about the week's forecast on my Telegram. I'm not going to re-explain it, but basically I'm expecting price to go bearish, which we kind of had, but doesn't really matter. Thing is, the bias is complicated, but you do have to stack up the confluences one side and the other, right? Do we have buy side liquidity being taken over and over and over? Keep in mind that it's like if we were here, right? On this time specifically, 8:15, everything to the right doesn't matter for me. Right now, we had an impulse, price retracing, just run on buy side liquidity, and this is where we are. This is the candle that we are on, right? To the left, there has been only buy side liquidity being swept and price just continuing lower. Do we have the buy side, the bullish side taking highs, aggressive highs, and then creating sell side, taking that, and then doing just going higher by taking sell side liquidity? No, we don't, right? Could we say that we have liquidity here that price strips, goes higher? Yeah. Does that move higher or create fair value gaps? No. Does it break important structure? It doesn't. As an example here, what is it that we have? Have a tiny bit of a low being swept. Price starts going aggressively higher. Do we have an important break of structure? Sure, we could say that this is important. But look at what happens. Price runs above that and drops much much more aggressive, right? Comparing to this. And then what do we have? Is this high broken? No, this is just a retracement. Creates buy side, drops. Buy side liquidity, takes that, drops. That's how I determine my bias. Basically, with just liquidity and what is price doing, right? So for me, when I wake up, or I get into the charts, better said, and I see this, that for me is good enough indication for me to be bearish, right? So that's my little talk about bias, but let's just continue. So this is New York Open, and based on my back tests and everything, I used to see phase 2 or session open or 8:30 to 9:30 to, as an example, in some occasions trading into a phase 1 fair value gap and then dropping lower or higher, right? Just continue with the trend that was set already by London, maybe pre-New York and everything. We did kind of have that today. And as you can see, if we go to the lower time frames, what is it that we have? Price swept liquidity, starts going aggressively lower, 5-minute fair value gap, session opens, trades inside that fair value gap. First reaction doesn't cause any kind of market shift, no fair value gap. When this low is broken, that's our fair value gap. This is where I wanted to enter. Price pulls away a lot, so I was not interested in this trade anymore. But as you can see, price comes back up and mitigates the fair value gap overall. This is the entry that we could have taken to sell. To buy, if I remember correctly, we never had one. No, we didn't, but we'll discuss about that later. Target, what would have been? The low of the liquidity, just expecting price to take that. Would have this been a trade I would have been happy with taking? Honestly, at first, yes, because price takes that, starts reacting aggressively here and everything, then retracements, it respects that and all. We do have some good confluences and everything, but problem would have been two things. First of all, target, because it's just 2R. I don't take anything below 4R, so 2R is just not enough for me. And second of all, when this impulse happens, look at how much do we have? We're looking for 2, and this is 1.5. We're literally 0.5R away from target. So the fact that price just goes back up through my point of break even is not something that I'm really a fan of, right? Could have we said, okay, so this is the first retracement, let's just skip it and then let's move the stop loss to break even? Sure. Could have we said, let's just wait for this low to be broken? Yeah, move our stop loss to break even, take it out, take profit. So this trade is a trade that does work out, that does have the things that I look for, but my issues with it were two things mostly. And if I remember correctly, I didn't want to trade it on the pundit. I did take it on paper trading. And the thing is, stop loss is pretty large, risk to reward ratio is complicated, and mostly that it wasn't mitigated immediately. If I was mitigated immediately, I was happy with it. As I wasn't, that's when I decided not to take it on funded or anything like that, because in my opinion, it was just not worth it, right? Does it end up working out? Yeah, definitely. Because again, we're looking for sell side liquidity for selling, right? That's what we're aiming for. Doesn't necessarily mean that that's where it'll go to, right? But that's where we're aiming for. And immediately after it takes that, it goes higher. This is a retracement that mitigates a 5-minute fair value gap. I don't think this is the size of the 5-minute fair value gap. Doesn't really matter. The thing is that this mitigates a 5-minute fair value gap. We have liquidity here. We have the market shift up here with a fair value gap. Does price mitigate this fair value gap, or this one, or this one, or this one? No, there's just no point of entry, because we could have continued to do that over and over and over, but at some point we're gonna have that, exactly that. No trigger, no trigger, no trigger, no trigger. This is the first trigger. Where's my stop loss? At least below this low. Why? Because this is the fair value gap, and that fair value gap is created with this candle. So the candle's low is this, and my entry is here. So little a get 1 to a 1 before it actually starts retracing to maybe then continue higher. I don't really remember what happened. Let's just go back to the important. What happened today? Bias was correct, in my opinion. At least down to this low, it was definitely correct. The fact that it ranged, it was just manipulating liquidity into the market, into the market basically. Of course, looking at it now, it's pretty clear. But when we're inside of the market and we're seeing price just ranging, we have to realize that it's ranging because of something. Price doesn't just consolidate because it wants to. Everything happens because of a reason, right? That's a phrase that everyone uses, but everything happens because of everything happens for a reason, and more specifically in Forex, because if we know that the market is moved by an algorithm or a computer that does things, so if it's manipulated by an algorithm, if you know the most basic thing about programming, every single program, every single application, or every single algorithm has instructions to follow based on certain factors or certain steps. So it's like the algorithm says, okay, so this is what I've just done. This is what I have to do based on my instructions. So this is exactly what I will do, right? So that's why we as traders are able to determine what price or where price can go to based on not on facts, but based on things that repeat themselves over and over. The reason why do they repeat themselves over and over? Because there's an algorithm that has to repeat those things. Does it happen exactly the same every single time? Of course not. They're not trying to make it easy. But of course, they are using an algorithm or something to move price automatically. So that makes this stuff happen as it does, right? Because the fact that this roundabout liquidity created a fair value gap and that worked out, it's not a coincidence. Okay, it's not a coincidence, just simply something that happens over and over. Could have we taken this out? Definitely. My problem with that, as I mentioned, was the fact that it didn't trigger the entry right away, which is just not something that I enjoy seeing. So for me, it was just not worth it. And target again was pretty close to the point of entry. Looking for a 1 to a 2 is definitely not worth it for me. Moving on to Thursday's price action. Okay, let's just look at it from here. This is London, right? This little box here, let's just put it. This is London. Look at the move that it does as soon as it begins. What does it do? There's these highs that are being respected. There's this high that, look at how price is aggressively going higher and then out of nowhere starts reacting. If we look to the left, we see that, we see this, we see these drops, right? So this just creates liquidity out of nowhere, right? The aggression after, there has to be, it's like the support resistance mentality behind this is basically price is going so aggressively higher. Why would it stop here specifically? Why would it not just continue going higher if it is going as high, as strong as it is? The reason because of that is because price just retracing, of course, has to breathe a little. The thing is that this high is just creating liquidity. If we look to the left, we have reasons to believe why this level could be respected, right? But it just ends up acting all as liquidity. That's why I say it's taken multiple buy-side liquidity and mitigated a daily fair value gap, which, if I remember correctly, was above this high, right? So daily fair value gap being mitigated in the meantime. So what happens after the buy-side liquidity, the mitigation of the daily fair value gap? happens. Market shift when breaking this low or when breaking that low, whatever you decide to choose from, it's exactly the same thing because the same fair value gap is what we would have used. Then another fair value gap, look at how first reaction acts as liquidity, aggression, continues, little high, taken as liquidity. As soon as session begins, not as soon as the kill zone begins, there's a high being taken, little bit of a reaction, fair value gap, market shift into 5, potential entry in here. Price goes slower, slowly, changes direction, retracement, takes buy side, continues slower. What was the trend and why we could have thought of the trend being bearish as soon as we began? We've mitigated a daily bearish fair value gap. We've taken multiple buy side liquidity, and immediately after all of that happens, we just have prices going lower. It's as simple as that. Bias is as simple as that, which can be complicated in certain occasions because price is just not clear enough. But when that happens, why would you even bother trading? When we have days like this where the direction is pretty much easy to understand or just given to us because of price just taking buys and just completely changing direction. When we have clear days with a clear direction, we really don't have much else to do. Right? We just have to follow that trend that price has given us quite clearly. So, okay. What I wanted to do on this day specifically is check the lower time frames on this because I don't really remember, and I say don't trade anything before session. I don't really know what happened, but as you can see, run on buy side, market shift, fair value gap, this would have been my entry. Stop loss up here. Price doesn't trade it. There's nothing that I can do. So no entry on phase 1, at least not on that price action. Why would have we looked for an entry? Because we have run on buy side liquidity, displacement, market shift, fair value gap in the 5 minute. Price traces out of that. 1 minute creates fair value gaps that I just not traded into. There's nothing that we can do about it, right? So we're just gonna skip through that. Okay, so let me check. All right. What happens afterwards? So session begins exactly on this candle. So I want you to think, because I put 2 questions in this because there are things that I wanted to remember to talk about and discuss, right? There are things that I just wanted to discuss. And I want you to pause the video or just listen to me talk while I'll try to explain it. Why would you avoid the price action going lower? And why would we take advantage of the buying opportunity that we had here, which I did take on paper trading, and I did regret not taking in challenge or funded, but I do have my reasons. And I do believe that I did right on avoiding this buy, but overall could have been a nice opportunity. Just think about it for a second. And I'll explain it now, basically. Session opens on this little line that I drew here, right? What does session do? Do we have any kind of indication to sell? We do. Overall, we do, right? What is it that we have? We had price taken buy side, creates a fair value gap in the 5 minute. That fair value gap is respected, goes aggressively lower, creates another fair value gap. This is something that we could have traded as an example, right? What I didn't really like about this fair value gap is that it doesn't sweep liquidity. I like to trade fair value gaps that have swept liquidity themselves, right? Because this fair value gap is created after it mitigates another fair value gap, which is the one that actually swept the liquidity. So the original for me will be this one, and this will be just following the trend. Right? I'm not saying that this is less important than the other one, but I'm saying what I wait for is exactly what I've said. Right? I wait for the run on buy side or sell side, the clear displacement and market shift, and 3, the lower time frame execution. Right? That's what I look for. So when this doesn't give me the first entry, taking this is possible, but it's following my 3 steps in a little bit of a less understandable manner, per se. Right? So let's see what actually happened with that, because I don't remember. No fair value gap at first, retracement, takes some buy side, aggression, fair value gap, potential entry, goes slower, takes sell side, changes the direction. Not much, honestly. And based on target, would have been definitely difficult to take. Well, not bueno. My Spanish just went off of me. All right, so here, why would I avoid this price action? We don't have a random buy side liquidity. We don't have the 5-minute creating a displacement and a market shift with by creating a fair value gap. We don't have anything. We don't have what I would call step 1. We don't have what I would call step 2. We literally don't have anything. Do we have a fair value gap in any of this move? We do. When do we have it? Here. And you can see here, which I put a couple of question marks because I didn't know what happened with that one. And then I remember that if we look to the left, we have that, right? Sure. Does it look really clear? No, because the only clear one is this one, which in my opinion is quite clear equal lows. But if we look even further to the left, we have a much larger thing that price would have definitely looked for, which is what it did. So, two things I want to mention here. Why did I avoid this price action? Why should you avoid this price action? It's ranging. It's not doing anything. It's doing nothing, basically. It hasn't given us a random buy side liquidity. If we're looking for sells, as I was to say, it hasn't given us a random buy side liquidity. It hasn't created displacement in the 5-minute. And when it does, it has already taken what we would have used as target, first of all. And this fair value gap doesn't take buy side liquidity. So for me, it's completely useless, right? So that's why I would have avoided and why I avoided this price action. Let's talk about why would I take advantage of this. I think it's pretty clear already, right? Because we've discussed the sell side liquidity that was spent in there. In price, look at how it was aggressive, then slowly reacting to this level. What is it doing? Exactly what we saw the other day, which was this price action, which is just reacting to previous lows. And if I remember correctly, we also had it on another day. Maybe not. Don't remember. The thing is that we have this exact same thing that happened on Wednesday is happening on Thursday. Price is just slowing down very coincidentally, right where there's another low, very specific low, right? And when we have lots of other lows. So it's like saying, let's buy here because price is respecting this a lot. Put our stop losses below this low because price has never gone below that low. And that's it. Yeah, we're going to be fine with that. And they were not, right? They were simply not. That's why we understand why this is important. So sell side was taken quite aggressively, I might add. And what is it that we get immediately after? We get the displacement. What do I look for? I look for 5-minute, for the random buy side or sell side liquidity, then for 5 minutes to create a fair value gap with displacement and a market shift. That is the exact reason why I could not take advantage of this move, right? Well, this move specifically. So this is the market shift, right? When it finally happens, there's nothing that I can do. The entry has already worked out. And as you can see, there's a fair value gap here. The price doesn't trade into. There's another one here, pretty high up. I'm not going to take something that high up. And also, buy side has been taken already. So nothing for me to do. Now, look at this. What do we have there? Buy side liquidity. Do we have buy side liquidity up here? We do have a couple multiple reactions around that level. This is not something I would have targeted. This is what I targeted with my paper trading trade. So is this a trade I should have taken with a challenge funded account? No. Simply because we don't have what I would call step 2, right? We do have the displacement that creates the fair value gap in the 5-minute, which is a very tiny fair value gap. Doesn't really matter. The thing is that it does create that, but there's no market shift. The market shift happens after the entry has been taken. After the entry works out, simply. So that's why I didn't take this entry. And if we go to lower time frames, what do we have? What do we have? Oh, yeah. 5-minute fair value gap. Look at this. Sell side. Taken. So could have we taken this? This is the 5-minute fair value gap. This mitigates the 5-minute fair value gap. Price goes higher in the 1-minute fair value gap. Is that an entry we can take? Yes, we can. Why did I not take this one? I don't think I took this one. Why should I not take this one? Let's put it like that. There's no market shift. Price doesn't change the direction at any point. I want to see the market shift after price mitigates the 5-minute fair value gap, right? Price mitigates the 5-minute fair value gap, tiny reaction, goes aggressively lower, sweep on sell side liquidity. In the meantime, that's not something that I look for in the lower time frames, but usually tend to happen, at least with good trades. Market shift and fair value gaps. Lovely entry. If this would have happened with a 5-minute market shift, there's nothing else that we can ask for, right? What are we targeting? This highs, 4.46 hour. More than happy with it, right? More than happy with it. Could have we gone further, gone for this couple of equal highs? Yes, I don't really consider those as really good targets, but what I did like was the 5-minute fair value gap that you remember that we discussed about on when the open happened. Oh, here. That was the fair value gap. Yeah, this is the 5-minute fair value gap. So we're definitely targeting this. I'm not going further than this. I'm not expecting the day to be bullish and just take London's high. I'm not going to go for a 20-yard trade, right? 19.91. I'm not going to do that. Unless, of course, I take, I don't know, 80% around the 5% or the 5R. Because here we have buy-side liquidity right below a 5-minute fair value gap that was barely mitigated, right? So for me, it didn't make sense to target further on this. I would have not targeted this because in my opinion, this is not clear liquidity. And as it has taken liquidity, I wouldn't really like price going above that high, which it ended up doing. There's nothing that we can do, right? After the time, of course, I missed out on this opportunity for a challenge account trade. So I'm just not going to take that, right? I'm just not going to take it that. So we had everything that we look for except the second thing we look for, which is the market shift along with the 5-minute fair value gap or 15-minute fair value gap. It does give us the fair value gap. It just doesn't give us the market shift, which is pretty important overall. Friday, which is complicated price action, boring price action in a bit, but we do have some interesting stuff to discuss here. Okay, took a little pause there because I'm tired. Let's go to Friday, which actually has a couple of not good trades. It has a couple of opportunities, let's call it. And let's look at this high first. No, we can't. What could have been a nice target? Let's just ignore that. Okay, so what do we have? Why could we expect a bullish day? Why could we expect a bearish day? I don't think we had much confluences to expect the bearish day. Overall, London literally begins with taking a tiny bit of buy side, aggressively lower, taking sell side, and then immediately changes direction. Keep in mind that Friday was a day with multiple news. 8:30 had 2 or 3 high impact news, and then 10 had, I think, 1 high impact news and a couple of medium impact news. I don't know. Pretty much a day bombarded with news, which is literally not ideal at all. The thing is that London was pretty aggressive. Everything before New York was aggressive, which is not something that we want to see. When there's too much aggression through the night, through London, through pre-New York, it tends to ruin the price action through New York. Or what happens is price ranges a little to look for buys or sells side liquidity to then just continue with the trend. So trades might occur a little bit later than usual, right? But today was a bit different, and as you can see, again, London was quite clear on what it wanted to do, took sell side aggressively higher, and something that I was mistaken on this day is that I didn't really realize that we had a tiny bit of a range. First goes aggressively higher, taking this buy side, changes direction, fair value gap in the 5, continues lower aggressively, run on sell side, aggression higher, market shift here, fair value gap here, not mitigated, fair value gap here, mitigated, aggression higher, market shift, not market shift actually, just continuation of the trend basically, another fair value gap, and this is where the only potential entry of the day could have occurred, which is this tiny bit of an execution, which would have been complicated for me because I would have gone for the extreme. This is exactly what I would have gone for when this happens, the market shift. So we have 5-minute, the run on buy side on sell side liquidity happens here, so that's 1. 2 would have been, well, 2 is here. This is the market shift and the fair value gap on the 5-minute. This is mitigated with a fair value gap, aggression higher. This could have been an entry from this point to this point, which is respected. But the thing is that there's another 5-minute fair value gap, right? this is where we could have looked for step 3. And again, I would have gone for this. Price mitigated this one. And from there it goes higher, which we could have taken a nice 5R for sure, right? At the very minimum, we would have gone for that, and that would have been a nice trade, right? Why did I not trade this? First of all, I was not really looking into the buys. I was not expecting much from session, which didn't really allow me to be... I was just not expecting much, so I was really not paying that much attention or enough attention, but I was looking into this because the news took buy side and then reacted a bit aggressively to the downside. So in the 1 minute, there was an entry that I took on paper trading, but the 5 minute never market shifted nor gave a 5 minute fair value gap. So either way, we should have nor could have taken taken advantage of this move, right? Bullishly, I was not even paying attention to the bullish side, right? I honestly didn't think we had enough to buy, but this run of buys on sell side liquidity was pretty good enough looking at it now and looking at it when I made like the post market analysis for myself. And could have we taken this? Complicated. Again, my problem would have been with the fair value gap that was around here and price mitigated this one. Again, I don't think I would have, because if I would have gone for the lower one. Now, let's talk about the rest of the session. More fair value gaps in the 5 that are not mitigated, and trading this high up is stupid, so I'm not going to do that. Plus, we had news pretty close, which is this candle down, so there's nothing that we can do. Now, what happens later? Price goes aggressively higher, and there's a lot of buy-side liquidity above this high, because it's not just any high. This is a high that was respected before the news even showed up. Was respected multiple times with a couple of candles, and then the news just completely goes aggressively lower. So that generated a lot of buy-side liquidity, which is taken immediately, right? Now, what happens? So could we consider this step 1? Yeah, definitely. Could we consider this step 1? Yeah, completely. We do have that run and stops and the aggression higher, and we do have a market shift. Now, again, this is the exact same scenario. Even though this is literally the first fair value gap created after the run and stops, this is so high up that I'm really not interested in trading. If this is where the entries are going to occur, I prefer to miss out on that, right? I just don't feel comfortable taking a buy so high up, right? Based on premium and discount, or based on the simple fact that price has to retrace before continuing higher. So unless I could have got a buy around here, it's just not worth it for me, right? It's just not worth it. Now, after the run on buy side liquidity, we see price immediately create a 5 minute fair value gap, but of course we needed the market shift, which was here, right? Do we get that? Not really, but there's a tiny bit of a high created here, which causes the market shift, and that's when one entry shows up, which I ended up taking with low risk, but that ends up working out quite well. This price trace into that, and that's actually the only one. Yeah. So keep in mind 2 things. I want to say that this is not an entry that I would have taken with a complete risk. This is not an entry that I should have taken at this point in the market, or at this time in the market. I should have not even been in the charts. I should have been doing anything but trading because of multiple factors. We had news. We don't have a clear price action. We don't have a clear market shift. And this is a pretty low point to be selling from, right? Now, the reason why I was trading is because I was interested in seeing if price would actually retrace, if it would actually look to end in a lower point from where it began, right? I wanted to see price reverse, at the very least take this low, maybe go even further than that. And I wanted to see a retracement to then, I don't know, I didn't really care what happened after the retracement. But the thing is that I said, let's just try and take advantage of the retracement. So again, I'm not recommending, of course, I don't recommend trading Forex. We've already talked about it on the disclaimer. It doesn't really matter. But I would have not recommended trading on this day completely, right? I would have avoided this trade this day completely. But honestly, today, not today, Friday, I didn't have much to do around the house. So I just completely decided to continue trading and see if anything good shows up. And this is the only trade that I took through the entire day, right? It's not that I spent the entire session just putting buys and sells. But this is the only trade that I ended up taking this day. And I did take some extra precautions, risked pretty low compared to what I tend to. And also, this is the 5-minute mitigation. This is the 1 minute fair value gap. So this could have been my entry. I avoided that entry, tried to execute on this next fair value gap. That is missed. And then I took this. Right, so fair value gap. First fair value gap is not mitigated. The second fair value gap causes a market shift. So I said, actually a market shift. So I said, maybe this is what works out. Stop loss was around here. So kind of expecting price to maybe go as high as this, mitigate that, and then continue lower. But honestly, overall, it didn't do it. So yeah, it is what it is. And closed literally here. I don't know if it was this candle or this candle, but I closed at pretty much the lowest point before this retracement, which likely would have taken me out on a break even. And then continued lower, taking this low pretty late into the afternoon, but I don't really think it finished as low as I might have wanted it to. But yeah, definitely could have taken 5R, took 3R only. And it is what it is. I did share the screenshots and a little bit of an extra explanation on that one on Telegram. It's not much. Again, it's a complicated trade, something that I would have not traded. And again, low risk with waiting for this first entry to work out, to then look for the next one. So Friday was complicated. We did get the things we look for. We do have the run and stops. We do have the market shift and displacement and the fair value gap and the lower time frame entry. Overall, we do have everything to trade from this day. But at the time, and being a day with filled of news, this is just a day that I would have recommended just completely avoiding and not trading at all. So that makes it for the week. This week was, let's actually go to the weekly chart. It was bearish, as you can see. I was expecting a bearish week for multiple reasons, and it does end up being a bearish week. Now we have a fair value gap in the daily chart that we could see being traded into. Not going to do the weekly analysis with you here because I'm tired, but that's definitely going to be included. It was a bearish week, so I was right about that in the analysis. It just didn't go as I thought it would. Right, because the week, where does the week begin? It began here, traded lower, retraced quite aggressively, and then lower. So it began here, and it clearly finishes quite low. I could have actually used the weekly chart, couldn't I? Yeah, just a bit dumb sometimes, yeah. So it began here, actually here. That's where it closed. Definitely bearish, right? Definitely bearish. Just not the way that I expected it. I really expected like a much aggressive or more aggressive fall, right, or drop, which didn't really have that, right? And it is what it is. Overall, the analysis was fine. It's just that it wasn't the way that I expected it to be, simply. But it is what it is. So that's really pretty much it. Pretty interesting week. I had fun with it. Took 2 really good trades. Only one on challenge and funded, right? The ones that worked out, I mean. Because the one on... Which were they? I think this is... this was definitely one of them. Tuesday. Monday we had nothing. Well, it's Thursday. Thursday we had some buys, but just impossible to take. There was a tiny bit of a sell, if I remember correctly. And now this is Thursday. Now this, I don't know. It doesn't really matter. We have already gone through it. So interesting week. The same concepts are still showing up every single time, right? We're just looking. The three things that I look for are still working out, and they're fine by me. They are fine for me as well. I just look for that. If I can have a clear direction based on London or whatever it is that happened before New York, great. But I need the confluences as well to show up in the day, right? In the moment. The session has to run above liquidity and then displace lower or higher, right? Because if I don't have that, then I just can't trade, and I'm honestly fine with not trading, right? Because overall, if you don't have the things that you need to trade and you just go ahead and trade, then you just kind of lose money for no good reason, and it's really not worth it. I've learned it on the worst ways possible, and hopefully you're gonna have to learn it like that. You just can't learn it by realizing that, yeah, I mean, he's right? Just listening to me and say, yeah, he's right. Why lose money when the setup is just not there? When you can save that money to take it to not take it, but to risk it whenever we actually do have something to trade, right? That's the mentality that I've been using lately, and it's been working out quite well, right? I prefer to maybe miss out on a good opportunity because maybe I made a wrong analysis or something, but if I don't see the three things minimum that I need to take a trade, then I'm just not going to trade, right? So that's pretty much it. Pretty long video. I have no idea how much it lasted because I paused and cut video in the meantime. So I do know it's a pretty long video. Thanks for watching the video. We've reached 1,100 something subscribers, which I have no idea why. But I do know that the things that I upload do help people, which I'm really happy of. And yeah, that's pretty much it for me for now. Tomorrow I might be uploading a video. Honestly, I've been so occupied with things around the house, which I just don't really have much free time this weekend, sadly. But yeah, at the very least, I wanted to do this, which I did promise to have. And tomorrow, again, hopefully I'll have a video, short video probably, talking about a few concepts or a few questions that I've been asked the past few days. And we'll discuss that in a couple of minutes. So yeah, that's pretty much it. Hope you enjoyed. Hope you took something from it. And I'll be seeing you on to the next one.